Welcome back to the channel. Lot to unpack, lot to talk about this week. Now, ultimately, with GDP contracting here in Canada, big conversation happening right now with the Bank of Canada. Will the Bank of Canada cut on September 17th as we continue to see the groundwork being laid for a potential rate cut here in Canada, and ultimately in subsequent meetings, depending on the data? There's a lot of questions that Canadians are asking about their mortgages and what options they have. And this week, I want to take an opportunity, go through that with you. Once again, thanks for stopping by. If you have not subscribed to the channel, please consider subscribing. Don't forget to hit that notification bell so you can stay up to date with everything that's happening. Leave your thoughts, questions, and concerns in the comment section below. Like and share the video. Let's get right into it. Ultimately, right now, what we're seeing is a unprecedented pullback in GDP here in Canada. Obviously, one that many economists did not predict. I think they predicted around 0.06% of actual growth in the country, in Canada, but ultimately that came in at 1.6%. Ultimately, so way off, from the growth numbers that we saw or heard even from many economists and the Bank of Canada governor just a few short months ago. If you recall, the governor and obviously the Bank of Canada had predicted that we were going to see a modest increase to their forecast of GDP. A lot of that was inflated data that was coming through on business exports here in Canada, obviously trying to front load those tariffs. And ultimately, as these tariffs still continue to wreak havoc on the Canadian economy and the sentiment on the direction of which the Canadian economy is headed, because once again, we have to understand these particular sets of tariffs on the autos, on aluminum, on steel, take time to really play out. And ultimately, as consumers still remain pretty resilient. Ultimately here in Canada, we did see, household spending, some business investment still pull through. The majority of Canadians, those living paycheck to paycheck, are probably not seeing that, right? Those that are maybe not homeowners, that are renting, maybe seeing a little bit of relief, maybe not. Ultimately, it depends on your particular scenario. But according to the government and maybe some of those who are in their ivory towers, they're really not potentially too concerned. That is literally the question here is are we seeing this massive disconnect, right? We see contraction in GDP that usually indicates that if we see this on a continual basis, 2 consecutive times, that we are entering a recession. Ultimately, as these numbers continue to roll out, we'll continue to monitor here on the channel, so make sure to subscribe. But the reality is unemployment. Is that going to be a problem? Youth unemployment is way higher than reported. We're talking about unemployment sitting at 6.9 to 7%, arguably if you believe what Stats Canada is telling us. And you have youth unemployment that's probably double that at 14%. And this is really a big problem, as well as we continue to see the Canadian government, the Liberals, sort of walk back this elbows up, this tough mentality about tariffing, reciprocal tariffs on the U.S., ultimately walking back, I think, $21 billion in goods. And rightfully so. I really think, ultimately at the end of the day, we don't want to have this theatrical play here like Doug Ford pouring out Crown Royal. But ultimately, when you start to see things like this, that's a theatrical ploy while there's other problems brewing beneath the surface in the criminal space. Obviously, what's happening there, but not going to get into it. But ultimately, right now, we see companies like Crown Royal. We see this continual, this move towards manufacturing in the United States. That could be major problems for Canada, especially as these tariffs on the steel, autos, and so on and so forth continue to wreak havoc here in Canada. Construction industry here in Canada is the major driver for growth. We've talked about it at great length. Ultimately, as we see the construction industry, housing fall off a cliff, especially the condo market. Unless you've been living under a rock, the condo prices have dropped significantly. Single family homes in most pockets feeling a lot of these pressures. Obviously, if you're a buyer, it is a time for many to consider looking. That's what we're seeing and gauging from what we see coming through our door, our phone calls, our emails, as clients that are saying, hey, we are owning a home. We're moving up to a bigger home. Yes, we're going to sell low, but we're also buying low. That's the mentality. And then, once again, I'm not saying or peddling any of that. What we're telling you is what we're seeing happening right now on the ground floor. And a lot of these clients are coming to us now with the hopes that the Bank of Canada is going to continue to pursue these rate cuts. We're sitting at an overnight lending rate right now of 2.75%. Some economists saying, hey, we're going to see a rate cut in September, again in October, maybe even in the end of the year. And believe it or not, we're getting really, really close to that. And maybe we're going to end the year off a little bit lower. And ultimately, as we continue to see all these issues here play out, ultimately here in Canada, but more importantly, what's happening in the U.S. Remember, U.S., the Bank of Canada can do whatever they want with their Bank of Canada policy rate. That impacts variable rate mortgages. I think we need to hammer that point that we get a lot of calls. Oh, the Bank of Canada's, back when they were cutting, oh, is my rate going to be reduced on the fixed mortgage? It's like, no, not necessarily, right? Because those are not directly coincide. They don't move in tandem. So what we need to find is what's happening with the bond market, with the treasuries, with the U.S. and the spending that is happening. If the U.S. cuts their rates, which they are also expected to cut in September, just around the same time, I believe it's the same time from the 17th to 21st, they're expected to have their, right around there. Ours comes out on the Wednesday, the 17th. I think usually the Fed announcement comes out with their preliminary debriefing and then the rate cut or rate announcement. So we should see what happens there. That, I think, will have a bigger catalyst, not only on the stock market, but also in the bond market. If we start to see the, potential for renewal of this debt into lower rates, into cheaper payments, that could obviously placate those bond traders, those who push that market. And that ultimately, in a nutshell, for those who've been watching, I will say, the bond market in the U.S., if you want to know what's going to happen with fixed rate mortgages, look at the 5-year Bank of Canada bond. It is an easy barometer to gauge where fixed rate mortgages are headed. If we see those yields pull back, ultimately we know exactly what we could expect. Now, once again, that doesn't mean that the banks, just because the bond market pulls it back a little bit, doesn't mean that the banks are going to change their rates instantaneously, right? That doesn't mean that everything's going to move right away just because it moves. What ends up happening is the banks will start to price in stability. When they see those rates continually move lower, some banks may move faster, some banks may move slower, but at the end of the day, what they're going to look for is that stability. They don't want to be reducing the rates, then having to increase them. They want to try to reduce them and keep them down as low as possible. And pricing discretions will happen in the back end. So once again, if you have questions about your mortgage, if you're approaching mortgage renewal, you're looking to buy, you want to better understand how these particular political events, these global events, these financial events can impact you and your family, reach out to us. Happy to set up a meeting, have a chat with you. Once again, our clients are very concerned about renewal, both fixed and variable. Talk a little bit more about that on our rate update. We'll be doing one for the month of September. Hopefully we get some stability there. But do you think the Bank of Canada is going to be cutting on September 17th now that we have this major contraction in GDP, unemployment data yet to come? All this information can be leading us to the fact that the Bank of Canada potentially is going to be cutting on the 17th. Do you think that's going to happen? Let us know in the comment section below. But until next week, thanks for stopping by, and we'll see you next week.